The great artist Pablo Picasso was fond of saying, you don't make art, you find it. How do you find great stocks? We are chatting with Stock Selection Strategies, Bull Markets, Bear Markets with Sunil Singhania, CIO, Reliance Equities. Sunil, we talked about your research methodology. When you meet management, what are you probing for them? And is there a difference between probing a large cap company and a small cap company?
So in a large cap company, as I said, the business model is established, the size of opportunity is established. I think the management team is very, very focused, clear, stable. In the mid cap and the small cap, it's exactly the opposite. You have to probe the passion and the honesty of the management. You have to probe the scale of opportunity, because most of these companies would be in businesses which are sort of niche or which evolving. Are in an early stage. And I think ultimately it all boils down to whether the passion is matching the ability of the company and the scale of opportunity to grow. One thing which recently we have started to do is, probe the new generation. Because what is happening, a lot of Indian companies have come to a particular scale based on the promoters, founders who had their thought process. But the second generation or the third generation guys are, foreign educated or well educated. They have a different thought process in terms of value creation, in terms of growth. And I think a lot of companies where we have found that the second and third generation is good, I think the companies have gone through a different orbit. You said you probe the honesty of management. How do you probe that? So one thing is, I'm a balance sheet believer, and I think in balance sheet, 80-90% you get an indication. Numbers don't lie. Numbers don't lie, whether the company has been raising capital very frequently or not. Dilution equities are red. Yeah, then cash flow. I think you can show as much profit as you want, but if there is no cash flow, there is no use of profit. So that becomes a key indicator. I think sometimes, sundry debtors, inventory, working capital cycle, unnecessarily bloating of gross block. I think these are all signs where you sort of make out. And if the payout is very minimal, if the company does not require it for growth, you hear the bells ringing somewhere. You also look at global companies, right? Why do you do that? We invested in the largest liquor company in India, United Spirits, and it turned out very well. And it was very simple analysis which we did. So we track around 2,600 companies across 20 countries on a passive basis. In one of the presentations, we found out that the market cap of cigarette companies globally was significantly lower than the spirit companies in each of the markets. In India, the largest cigarette company is traded at a market cap of 40 billion. And the largest alcohol company is traded at a market of 1.5 billion for all obvious problems. Yes. And our thought was that if the problems got sorted, we would double our money. But if it would not, then we would quadruple our money. Right. And if you actually see, 15% of the world population, 50% market share. So technically, you have 7.5% of the world's market share. Right. In the fastest growing alcohol market. And it was not a very, you can say, simple fundamental buy. But it was a good way of at least having a thought, and it worked out well. Somewhere I read that Jindal Steel, you guys were so excited you couldn't wait to visit the plant, got a small cap company into a major company. What trickled you into that investment? There was a big tailwind for commodities at that point of time, So I think we were lucky in the sense that between 2003 to 2008, you had a super bull cycle for commodities. And you were at the start of it. You had the start of it. The valuations were so low. We had the second generation guys, as I mentioned earlier, come into business. Each were managing their own parts of the business. There was massive investment which they had planned, and they had the raw materials or the backward integration to back. So I think it worked out well. So from a very small company, the company became a large size company, and with that the PE multiple also expanded. But what gave you the confidence that in a commodity business with unknown entrepreneurs, in a manner of speaking, that you would get it right? So that is where the personal visit comes into play. So when you visit the facilities and you see the infrastructure which has been created, you are very sure that this infrastructure is capable of managing maybe 5-10 times more capacity than what they already have. And I think somewhere down the line you have to take a call. They say in cricket that fast bowlers hunt in pairs. Are Madhu and you like that? I mean, you go visit companies, the 1-2 punch, the big picture, the numbers guy. Was it like that? I think it worked out well. So Madhu is a very passionate guy, believes in instinct. I am a very number focused guy. So I think it works out well, And I would say very clearly, I am very, very cautious buyer. And I think somewhere down the line, even if you find stocks, if you're not able to buy, it does not work. So I think that is where Madhu's strength comes in. He's been in the market. Able to close a deal. Able to close a deal, be a little bit pushy. And I think from my side, wherever I feel that the numbers are not matching the broad picture, I think one thing we have to remember that it also makes sense to avoid making mistakes. So, we all talk about how we pick stocks. We never talk about how we avoid stocks.
Rule number one, don't lose money.
Yeah, that is the biggest thing. Otherwise, you won't have money to invest.
That's a great point.
Sunil is one of the best stock pickers I have come across in markets. He is a man of detail. He can brilliantly analyze financial statements and balance sheet of variety of companies across sectors. To me personally, he is more like a family rather than just being a mere colleague. He has contributed immensely and has been a backbone for Reliance Capital Asset Management Company. I still think these are very early days for him and he has a long way to go. All the very best, Sunil. Do well.
Another stock that has been well associated with your house has been Divi's Lab, the pharmaceutical space. Even today, a lot of excitement. What was the story behind that?
So again, this is a company which has never raised equity at all. In fact, the IPO was also offered for sale because of a very early stage, dilution they had done to a private equity guy. After that, the company has never ever diluted money. And if you see the amount of dividends they have paid almost 2,000 crores of dividends since their, start of their life. Even now, they are continuously growing at 20-25%. Very high ROE, very high quality management, very high quality company.
When you walked into the company, did you know that this was a special company for you?
As we started meeting them more and more regularly, the confidence levels improved dramatically. And I think that is where investing is one thing. Maintaining your investment is another thing. You can buy something and sell at twice the price. You might be happy, but the same company might be 50 times your price or 100 times your price, which is what happens. So I think buying is one part of it. Maintaining it and ensuring that you don't sell early is also another part of it.
We have to go continuously into a break. We'll take one, come back and chat some more with Sunil Singhania, CIO, Reliance Equities.